if you are investing in a particular fund, right, in order for your money to go to zero, that means every single company within that fund must go to zero. And the likelihood of every single company going to zero is just about zero. And the reason that is because if every company that we know and love has, or maybe you don't love them too much, right? But every company that we know of, if it were to go to zero, then our world would cease to exist in the way that it does today. Our economy would cease to exist in the way that it does today. Our country would cease to exist in the way that it does today. Okay, and so this is just not very likely. And you look at the long history of the S&P 500, the Dow Jones, the NASDAQ, this is just not really in the cards unless something catastrophic is to occur. Okay, so what we have to understand is that yes, there is a risk to losing money in an individual stock in the short term, right? You can make outsized returns in the long term. Okay, but if an individual stock goes to zero, you lost everything. But a fund is not going to go to zero. A fund can still provide you good returns, but funds are unlikely to provide you some of the outsized returns of stocks like Tesla and Apple and Amazon and Netflix, how they've done over the past 10 to 15 years or so. You're not likely to find those types of returns in a fund that you're invested in, but they can provide you the returns of the broader market that will allow you to grow over time and take away some of that volatility that you may find in individual stocks. So the question really comes, should you invest in individual stocks at all? Well, I've told you many, many times, I think that if you can do the homework, right? If you have a level head, if you're patient, if you can actually invest for the long term and not just short-term trade, then putting some of your money in individual stocks is a perfectly fine thing to do. I think you can put money in individual stocks and make abnormal returns and make returns that are better than those of the market. I've done so myself, so I believe that you can do so as well. The problem is that people think that they should just put all their money into individual stocks, and I don't think that that's the case. I think the vast majority of what you have still should go into index funds like the S&P 500 index fund. I still think that it should go into mutual funds or ETFs or things of the like that are more broadly diversified, that take away some of that diversifiable risk, okay, and really leave you with that risk that is not diversifiable, the risk that is systematic and risk that you're going to have to deal with anyway. And it can allow you to have more stable returns over the long term. And that can be very, very beneficial to you and your portfolio. Look, I am not somebody who's going to sit here and say that I think everybody should invest in individual stocks. No, I understand that most people don't make money in individual stocks. Most people do lose money by investing in individual stocks. And far more people lose money by day trading. They lose money by trying to trade individual stocks over the short term, which I definitely think is a horrendous idea. I don't think that's something that anybody should be doing. But I do think if you can find companies that you believe are going to grow over the long term, that you've done the homework on, that you understand their company, that you can make long-term educated bets on these companies, that you could make really, really good returns. Because there are companies that you can just look at today and go, there's no way that company goes away in 10, 15, 20 years, 30, 40 years, right? There's no way that we no longer have this particular company in our lives. I mean, we talked about Amazon a few times throughout the course of this episode. Amazon is a company that is very ingrained in the life of most Americans now, so it would be very hard to see the world without an Amazon. But that said, we have to understand that when the story changes, we can change our investment thesis, because there have been many, many companies over the long term that have had really good stories, that have had a lot of success, and then the world changes, the economy changes, and individuals have to shift to different products, different services, and different companies end up taking over. That's not saying I believe that happens with an Amazon or any company like that, but I'm just saying that there's a possibility, and that has a lot to do with that individual stock risk, right? So I do think that individual stocks carry more risk. It's proven. They do carry more risk. They do carry more volatility, right? They do carry a lot of things that a lot of investors don't want to have to deal with. They carry some stress, especially if you don't know what you're invested in. They carry some stress for a lot of investors, or even investors who do know what they're invested in, but they worry far too much about the performance of their one individual company that they own. I think that you can easily get yourself out of that, at least in large part, by investing in index funds and ETFs and things of the like. But all this said, that doesn't mean that you have to be just an index fund investor or just a fund investor in general. You can put some of your money into individual stocks, but have a percentage of your money in individual stocks that you feel comfortable with. Not money that you're willing to lose, because we're not gambling, we're not making bets. We are investing for the long term, and we are still investing in more than one individual stock. Look, my individual stock portfolio is not a group of, one or two stocks. No, it's not one or two stocks sitting within that portfolio, but it's also not 100, right? Because if I want to own 100 stocks, then I can go out and buy the S&P 500, or I can go out and buy the QQQ NASDAQ index, right? I can go buy those types of things if I want that much broad diversification. But my single stock portfolio is typically anywhere between, sometimes 7 to 15 companies. I think right now it's right around 9 or 10 individual stocks, right? And that doesn't change a whole lot over time. And those individual stocks were specifically chosen by me, and I did the homework and I understand the companies, because the more companies that you put in your individual stock portfolio, the more companies you're going to have to do the homework on. And who has the time to do the homework on 100 companies? Who has the time to understand 100 companies? I know I don't. Okay, and so if you don't have time to invest into those companies, right? You don't have time to invest into reading their financial statements and doing the homework, understanding their numbers, understanding what they do, all these different types of things, then you are going to end up in that place where you take on risk in the way that Warren Buffett said. You are taking on risk because you do not understand what you're invested in, right? You are taking on risk because you don't know what you're doing. And that can be extremely problematic. And I don't want that for any of you. I want you to take on educated risks, because we do have to take on risk if we want to make any type of return. That's one of the basic rules of finance, right? More risk, more return in general, okay? And so we are going to have to take on risks if we do want to make very good returns over the long term. But we need our risks to be calculated, and we need our risks to be to where we know that we are still going to make money over the long term. We know that we are still going to have positive returns over the next 10, 15, 20 years, whatever it may be. And just based on history, we can know that this is the case. And based on understanding what companies do and how companies work and how companies' revenues are going to grow over time and their earnings are going to grow over time, you can do the same thing with individual stocks. So I implore you, right, if you want to invest in individual stocks, do your homework. Okay, understand what the companies are and what the companies are doing, and you will be able to take some of the risk that is inherent to investing in individual stocks and shift that risk away. Okay, a lot of the risk goes away if you just understand what you are doing. Now, you have to have a gut. Okay, you have to have a tough gut, because you're going to get punched many times with individual stocks. Okay, there's a lot of stuff going on right now where individuals are getting punched. I talked about Peloton a little bit earlier, and Peloton is going through a lot of issues with their treadmill right now, and a child being injured and then eventually passing away from an injury from their treadmills. And that is something that can happen, that can change the value of the stock very, very quickly and very, very swiftly. Okay, and then you have to check your gut. You have to see if you still believe in a company, if you still believe that a company can do what you thought they were doing in the first place. And remember, don't be afraid to change your holdings if the story changes. But just because something happens in the short term does not mean that the story has changed, does not mean that the company has changed, and does not mean that you can't make outsized returns over the long term. So you have to have a tough gut. You have to be able to take some volatility and take some firm-specific news. But if you can hold on through that, and you can understand what your company does and stick with them over the long term, then you can make some very, very good returns. And I look forward to seeing what types of things you guys can do with this information that I've given you. And hopefully this helps you to understand a bit more that, yes, there's risk inherent to individual stocks, but there's risk inherent to all of your investments. And the more you know, the less risk there will be.